small cell. So really, what's all the fuss around it? I think everyone in this room is highly educated, so they understand what's going on up here. If you take a look at these maps and you look at sort of the way networks were historically built and the way networks are now being built, neither of these two diagrams is the reality. There was the old school of we built a bunch of macros, we lit it up, and maybe we'd turn the power up, turn it down, we'd tilt some antennas a certain way, maybe we'd move one rad center down a little bit, or we'd take one sector at 120 and move it down to 90 and point it in a different direction. That's old school thinking. There's a new style school thinking, which is down below, which is, hey, we could just do it all with small cell too. That would be great. That'd be amazing. We could densify the network and we could put millions of users in a 10-mile geographic area. That would be awesome. The reality is neither of these two environments really work or exist. So what ends up happening? Well, what we find is that both of these things are true, and both parts of the ecosystem must work together and coexist. You need macros and you need small cells. And this is what's happening today. This is what carriers talk to us about. They talk to us about the fact that they're going to continue to invest in macro sites, but what they're also trying to do at the same time is build a safety net underneath the macro, what we call sort of densifying the network and fortifying the network. And how you do that is you use small cell. You can use small cell to build underlays, or you can use small cells to fill in holes and fill in pockets. So take a look at those two strategies. Those are pretty interesting. So at the top, we've got a traditional, 4 macro sites. Then you look at the underlay up to the upper right-hand side. Riley's house is somewhere in that upper search ring up there in that macro to the upper right. And we have these underlays that are built. And folks like Exonet, Crown, and Insight, this is what they do. They build these underlays. It could be 3 nodes, it could be 20 nodes, it could be 50 nodes. This is an essential part of network expansion today. And then if you look at the bottom part, you've got what's called fill-in. Fill-in's pretty easy, right? We all drive home from work at some point. There's always that dead spot in the network. How do you fix it? You fill in. And we do infill sites. This is current network architecture thinking today. This is almost old school thinking. There's new thinking in place. So now that we understand network architecture, and we understand how DAS fills and complements with macro sites, now the question is, where in the world does Wi-Fi fit in all of this? And there's a lot of hype around Wi-Fi, right? And we always sort of tell people, Wi-Fi's here, it's always been here, and Wi-Fi will continue to be an integral part of the ecosystem. That's not going to change. From our perspective, Wi-Fi is an essential part of your consumer experience every day. We all go home, we turn our laptops on or we turn our tablets on. What do you use? Use your Wi-Fi connection. You get on an airplane, what do you use? Use a Wi-Fi connection. Wi-Fi is not new technology, and it's not going anywhere. None of what we do in the DAS business or the macro business is going to displace or remove Wi-Fi as a part of the ecosystem. That's a huge myth out there with investors. You'd be surprised how many public investors we go talk to and they say, Wi-Fi is going to kill DAS. And we're like, no, it's not. It's been here for 2 decades, actually, and here's the numbers. So here's your consumer experience, right? This is every consumer. This is an average per subscriber across all 4 major networks. Here's your usage pattern, right? You use roughly about 5.4 gigabytes per month. Most of us in this room use a lot more than that. But you use 2 of it mobile. You use 2.8 of it Wi-Fi at home. You use 0.6 on the road. And then other Wi-Fi, which is probably go-go or wherever you go, or if you're at a Starbucks hotspot or something like that. This is your consumer. This is the consumer pattern right now, today. This isn't going to change that much. Your user experience is not going to change. But for some odd reason, everyone thinks Wi-Fi is the great disruptor. That's what Google would all like us to believe, because then they don't have to buy Spectrum. But Wi-Fi offloading will only increase to 65% of mobile traffic. 65%. So when you think about it, and you look at what's happening here, there's not a demonstrative change in the mix between how we use Wi-Fi and how we use the cellular networks today, the mobile data networks. This isn't going to change. Both of those ecosystems are growing at the same pace and same velocity. And what's interesting is if you look at US wireless traffic by technology type, you can see what happens as we move further down this road. Wi-Fi is still an essential part of the ecosystem. we don't see Wi-Fi going away. We've got a lot of smart people that tell us that. We believe that. Wi-Fi is here. It's always been here, and it's not a disruptor. So, we don't use DAS anymore. Rossmann has corrected me. I'm politically correct now. It's now DNS, Distributed Network Services, Jonathan. Get with it. So this is the business we're in. We're distributing bandwidth. And the current DNS market today is there's about 74,000 active nodes in the US. So before we commissioned some smart people to do this report, we always thought the number was around 55,000. So this number is about 20,000 nodes wide of where we thought the market was. This was pretty interesting. And then if we look at how this is distributed, this even sort of surprised me even more. I have a laser pointer, see it? Sharks with laser beams, here we go. So we've got neutral host market right here. And if you look at the neutral host market, it's pretty interesting. It's pretty even between, outdoor networks and indoor networks. And if you look at that, you can obviously see who the carriers are, but obviously the big red is Verizon, who has traditionally been the CapEx leader in towers. And then what really surprised us is how much of the networks are actually still proprietary and owned by the carriers. That the carriers are self-performing a lot of this work. This was the big surprise to us. And the biggest self-performer is AT&T with 10,000 nodes. We'll talk about AT&T in a second. So what also surprised us is going into this investment, we thought that outdoor node expansion was the future and that indoor, there was only so many indoor facilities you could build. Indoor was dead. Completely wrong. Mythbuster. Indoor is not dead. In fact, a lot of the action and where carriers feel their pressure today is indoors. And so once again, as we think about those verticals and where the carriers are trying to penetrate and where they need incremental bandwidth, it's in teaching universities, it's in hospitals, it's in hospitality, commercial office properties. Places where we go, places where we aggregate, places where we use and consume data. And if you think about how this looks and where it goes, look at the product mix as we get out into 2020. So here we are in 2015, 49,000 active locations, 270,000 total nodes needed. That's explosive growth. That's a much faster growth trajectory than when the tower business was sort of in its heyday in 2007, 8, and 9, and then in its new heyday in 2012, 13, and 14. These growth numbers, these CAGR numbers are much faster than towers. This caught our attention. This was the aha moment in thinking about how to invest in distributed network services. So indoor DNS market will grow to 12,000 locations and 130,000 nodes by 2020. So there's 12,000 distinct new locations that have to come online, that have to be built. So think about that for a second. That's a lot of real estate that needs to be acquired. It's a ton of real estate. A lot of property owners are going to have their doors knocked on, and we as an industry have to figure out how to service them. And what are the right products to bring to them? What's the right business model? Do they put up the CapEx? Do we put up the CapEx? What's the revenue share arrangements? How do we charge the carriers? How do we induce the carriers to be at these facilities? This is the biggest part of the ecosystem right now in terms of small cell. This is where the carriers are focusing their attention. And what's interesting about this is, just as in macro sites, Verizon was the leader, the thought leader in driving macro deployments in 2011, 12, and 13. Verizon is also the thought leader in small cell. It's estimated that Verizon alone this year will build 4,000 nodes, just this year alone. They'll build another 4,000 to 5,000 nodes next year. They're the thought leader. They did it in macro sites, they'll do it again in small cell. The other carriers will have no choice but to follow. So Verizon is the leader. We've talked about venues, hospitality, commercial real estate. And also we think that this is an important issue for commercial property owners today. In our business Vertical Bridge, we represent, I think now today, about 70 property owners where we represent their rooftop and we help them think through small cell. And you'd be stunned to know how many sophisticated commercial property owners have no small cell solution at all. Some of the biggest REITs in the world have no concept on how to deal with the small cell issue. But they will tell you within the first 5 minutes of a meeting you have with them, talking to them about telecom, the first thing they'll say is, oh, you know what? My broker, he walked KPMG up to the 30th floor of this brand new building we're building in New York, and they love the space, and they said, well, do our cell phones work? And our broker went, this is what tenants want. They want connectivity. They want to know that their mobile devices work in the basement where they eat lunch. They want to know it works in the parking garage when they leave the building, and they want to know that they're going to have connectivity when they're sitting at their desk on the 30th floor. And if they don't have it, they're not going to lease space from you. They're going to go across the street. They're going to go to the guy that actually understands this issue, and they're going to lease space from them. Because part of the decision-making team in commercial office space now is not just the CEO. In fact, the CEO doesn't even go and look at the commercial office space anymore. It's usually the office manager, the head of operations, and the most important decision maker, anyone know? IT director, the head of IT. So this is a big issue in commercial real estate and a huge opportunity for everyone in this room, we think. So what's the size of that market? It's $1.7 billion in annual reoccurring rent. $1.7 billion in annual reoccurring rent to everyone in this room. That's a huge opportunity. That is far bigger than the tower opportunity in the late 90s, in the mid-2000s, and the 2010s. This is a massive revenue opportunity, and it's a reoccurring revenue model, which gets us obviously pretty excited. So just to make sure that we didn't give our friends on the macro side, so if there's an embedded equity analyst, a sneaky banker in the room that runs off and says, Ganzi said that the macro business is dead. It's not dead. I'm here to tell you it's not dead. The reality here is this is a unique ecosystem that's tied together by all these components, by small cell, Wi-Fi, and macros. In fact, macros are going to have a pretty strong amount of demand, particularly in 16, 17, and 18. We see significant growth in the macro sites. A lot of that's coming from Sprint, coming from T-Mobile, and AT&T. All three of those carriers are still going to heavily invest in macros. So how do we think about this when we sort of slice up the potential market sizing? We actually broke this out by carrier. We thought this was pretty interesting for everyone to see. Current DNS market, 40,000 nodes. Once again, that's that shared model where you have Crown, HetNet, Insight, American Tower, the guys that own the neutral host networks. And then as we think about what's coming on in terms of demand, one of the biggest opportunity sets is AT&T. They sort of walked away from the U.S. CapEx spending business this year. Their version of the story is very accurate. Arguably, they spent more CapEx this year than they've ever spent in the company's history. They just happened to spend it in DirecTV and in Mexico. But they will be back. They're already back. They're spending money right now as we speak. We believe AT&T will be a huge opportunity over the next 3 years. And part of the resolution of Project VIP is we all know that was a 50,000 node build. They self-performed 10,000 nodes. We think there's another 40,000 nodes to be built. That's a lot of activity. Verizon's kind of a wild card. We think it could be 60,000 nodes. It was sort of, we thought it was 40, and then based on the trajectory of what they did this year and what they're talking about next year, we have sort of this extra little kiss, this little 20,000 node kiss above that. Could be 60,000 nodes. So just in the near-term market of carriers that we know that have cash on their balance sheet, understand DNS, understand small cell, and have shown a discipline and a velocity for spending, this is our near-term market set right here. It's really these sort of 80,000 nodes and maybe 100,000 nodes between AT&T and Verizon. Sprint's the wild card. We believe Sprint is a big player in small cell. We believe Sprint will deploy a lot of CapEx in small cell. How they do it, I think, will unfold over the next couple of months, but we believe Sprint is a huge opportunity for everyone in this room. And then, of course, T-Mobile. We think T-Mobile, which is traditionally a laggard in CapEx, they will have to respond in small cell. They're already responding. They're jumping on neutral host networks. They're self-performing some of their own Wi-Fi. They're self-performing some of their own infill sites. So we believe that T-Mobile could be a significant player, on this chart. So when we put it all together and we look at it, we say, wow, this is a market that is going to grow 3 to 5x between now and 2020. That's a significant opportunity. That's a lot of infrastructure that has to be built. So where is everybody when we think about this? So as we know, everyone's already evolved to LTE. Sprint is finishing their evolution to LTE. But we've never seen an investment period in the history of the wireless business where all 4 carriers are spending CapEx at the same time. Usually sometimes we get 2 or we get 3. But as we turn the page into 2016, we believe all 4 carriers will be investing next year. AT&T, Verizon, Sprint, and T-Mobile will all be spending significant amount of CapEx on infrastructure next year. And we don't think that's a huge leap of faith. So, where does this all go? Where do the roads lead? We believe, to stay relevant, that you need to be thinking about network architecture and network convergence. And we believe the future of our business isn't so much whether you own a tower or whether you own a DAS network or whether you build a Wi-Fi node. It is, where are you in the relevance of the network itself? Are you in the business of building networks, and how do you perform for your customer? So we think that our buzzword around our office is, we're really in the business of bandwidth delivery. That's really the business we're in. The different elements of infrastructure facilitate that, but at the end of the day, if we're going to stay relevant, we have to be in the business of delivering bandwidth for our customers. Because if we're not relevant. They don't want to talk to us. We're not solving their problems. And so we think a lot about this. We've got to be in their problem-solving business. So as we think about that, there's already a couple of thought leaders in the industry, people that we respect a lot that we think are doing the right things. We think about what Crown has done with Synesis is very smart. The Synesis footprint was very complementary to their existing network architecture. They're thinking about different laterals and how to build off the Synesis network. And the whole key there is buying a fixed asset, using that fixed asset, and generating incremental cash flow from that fixed asset. Whether it's, continuing to sell fiber circuits, building laterals, connecting buildings, these are the things that Crown is thinking about. We think it's the right direction. Zayo's made a big push into small cell, as all of you know. Zayo believes they will own and operate somewhere between 20,000 to 30,000 nodes over the next 5 years. They foresee themselves as a very, very important component of bandwidth delivery. Dan Caruso is a visionary, and he's got the right ideas. Lumos. We think about Lumos, which was a sleepy copper telco, that now most of their revenues are derived from fiber to the cell site and small cell. Thinking about convergence, thinking about how to help their customers. And their entrance into small cell was completely predicated on one notion: serve the customer. Serve the customer. And that's how they got their first small cell order. And then as we think about co-location services, this is the market that's really changing. And I know we're here to talk about small cell and HetNet, but this is pretty exciting. Traditional co-location and traditional data centers, that business model's completely changed. And that's a business where if 3 of the leading public CEOs were sitting up here, they would tell you, for us to stay relevant, we've got to be offering different services. We not only have to offer primary co-location, but we have to have disaster recovery, and we have to have cloud and managed services. Once again, to be important to our customer, because if we don't deliver disaster recovery and if we don't deliver cloud, you know what? Somebody else will. And not only will we not provide those services, we'll lose those 50 racks or those 40 racks because, you know what? There's a property down the street that provides all those services. And so as we think about the data center business, we actually think it ties pretty tight with distributed network services. As we think about where carriers are building networks, we think also about where content providers are wanting to store their data. And that is really happening on the periphery of the network. Pretty much every major content provider has already built out the urban core. That's done. Most of those buildings have been fully leased, and they're adding incremental racks in the core. But as they think about it, the key problem for content providers today is pushing content out to the edge. If you can't provide content out at the edge, your core of your network gets congested. And so a lot of carriers today, particularly the content providers, we hear this from Google, we hear this from Amazon, we hear this from Netflix, we hear this from Facebook, we hear this from Twitter. They want to start pushing content to the edge of the network. And the only way you do that is through smaller, more nimble, periphery-located data centers, which ties actually very neatly back to outdoor DAS. As you think about how DAS networks are built, and you think about the fact if you're building an urban DAS system with 100 or 50 nodes or 80 nodes in Newton, Massachusetts, or you're building a DAS network in Glendale, California, and you think about those areas that are secondary markets, and those are markets where if you're building a network and it's 20 nodes or 50 nodes, you're going to have to build, eventually you're going to have to build a co-location facility where you put the radios and you put the optical light switching gear and all the electronics. Well, it's only natural that if you build an extra 2,000 feet or 3,000 square feet, you're going to have content providers there. And the closer the content is to the network, that is where people want to be. That is certainly where Netflix wants to be. And by the way, that's where Comcast and Time Warner want to be. They want to be right next to Netflix. People follow each other. That's the way the co-location space works. The next battle for bandwidth is really going to happen not in the urban core, it's going to happen in the suburbs. Because honestly, that's where content is being consumed. That's how we have to think about these things. So anyway, I'm sorry, I'm waxing a little poetic, but this is where we believe the war will be fought. So what is the bandwidth delivery business model? You know, great, Mark, that sounds pretty cool. You gave a great speech. But we think it's the old age adage of follow the customer. The customer is always right, and this is what customers want. They want network architecture that's more nimble. They want us to have the ability to have an arsenal of site solutions. One-trick pony infrastructure providers, you're not dead, but you're in trouble. You've got to be able to respond to multiple parts of the delivery methodology of how carriers think. And so the next thing we talk about with our customers is they say cost. They say, you tower guys, you're all too expensive. Okay, fine. Let's get past that. What does it mean? So as they think about what 5G looks like, I think you need to be thinking about what 5G looks like. You need to be thinking, what is the future of network architecture? And if you believe that multiple input, multiple output technology is for real, which I believe it's very for real, you need to be thinking about how we deliver that bandwidth. And do the traditional pieces of the infrastructure ecosystem, is that going to be the way that we deliver 5G networks? And I think the answer to that is I'm going to cop out and say partially yes and partially no. Because the reality is if you really understand how MIMO technology works, you're actually using multiple base transmitters and multiple antennas at the same time. And if you're going to do that, then you better be building a network. You better be building a network that's flexible, that's nimble, that has multiple access points. And when I say an access point, an antenna. So that could be a Wi-Fi node, that could be a DAS node, that could be a macro tower, it could be a rooftop. But really you have to think about the interconnectivity of those access points tying back to a central location. And that's where we get to C-RAN, whether or not you believe C-RAN is the future. Carriers would love you to believe C-RAN is the future. Why? If you had 20 different sites with 20 different compounds and 20 different utility bills and 20 different site maintenance vendors versus going to one head-end room where you could walk in and you see all 20 of your radios, and you could, from one radio room, you could make one software upgrade, you could do all your maintenance, you could swap out all your radios in one fell swoop. Would you like that? I'd probably say yeah. If I was a carrier, I'd say I pretty much would like that. And if you think about SDN and software-defined networks, and you think about MIMO, and you think about C-RAN, and you start putting these pieces together like a puzzle, you begin to understand this is the future of network architecture. This is where we're going to head. And you either change and adapt, or you're dead. So this is what we're thinking about. And then there's the last component. So they've come to you and they've said, okay, you got to have all these site solutions. You got to be cost effective. Oh, by the way, I want it yesterday. That hasn't changed, right? I see some smiles in the room. For those of you that have been in the industry for 20 years, yeah, they want it yesterday. And they want it cheaper. And they want their on-air dates. We're all used to that. So really, tying this all together, I'd leave you with one thought, which is think about the delivery methodology. Think about the network. I think if you really think about